Good morning. Welcome to Almus Market Morning. Once again, US stocks made good recovery from the lows based on corporate earnings that look better. And some in the market believe US Fed will not derail the recovery with too much tightening. As S&P 500 has regained 50% of its losses, I feel it may be headed for a full recovery also. And positive sentiment after such a recovery will take it higher. Fed's Bullard said that upcoming monthly jobs report will not be good, and that has kept the yields somewhat on the lower side. In fact, US rate hike expectations have been mellowed down by some members, and there is, on the other hand, an increasing hawkish expectations from other central banks. Australian Central Bank decided to end its bond purchases yesterday and will probably hike in August this year, as against move expected next year. ECB is in a bind as inflation sustains at high level, with markets starting to discount a rate hike this year. We'll watch today's flash inflation number from Eurozone very closely. MPC in UK will hike at least 3 times this year, with the next one slated for tomorrow. Even the most of the dovish central bank, the Swiss National Bank, has indicated that they may act against sustained inflation. Yesterday's price action makes it very interesting on the technical charts, as Euro has had a morning star formation, and the dollar index has had a evening star formation. Usually these formations are associated with the reversal of the existing trend. On the oil side, OPEC is seen sticking to the current policy despite high oil prices, as they continue to assess the demand after the latest virus wave. Dollar overall looks to be heading some more downside, as the rate differentials begin to narrow against other major currencies. On Indian side, we had the budget presented, and the one announced yesterday contained nothing dramatic or path-breaking, and little that concerned with the common man directly. At the same time, it was growth and investment oriented with a reformist approach. It did disappoint many versus their expectations, but best thing was that the government avoided including any populist measures, notwithstanding that many state elections are coming up soon. It was a mixed picture for the rupee yesterday. Initially, we had a sell-off in the dollar that took us to below 74.50. Later on, USD INR recovered as markets started to feel the weight of fiscal at a higher level deficit, as well as the higher borrowings, which may lead to higher market yields. In fact, the yields have rallied more than 20 basis points from their recent lows. Besides, no mention of measures to enable including Indian bonds in the global index may remove some of the bullishness from the rupee, while the disinvestment plan, particularly ILSA IPO, will keep the market focused on hefty short-term flow. Expect rupee to range between 74.5 to 75 for the rest of the week, and we will await more news on LIC IPO in the coming days. Thank you.
Thank you, JK. Good morning, everyone. Due to some of Fed members' indication of a lesser aggressive Fed has cooled off Treasury yields, and it is expected to range 10-year in 1.65% to 2% range till the real rate cycle begins. Yesterday, I quoted the same number for 2 years, that was 1.10 to 1.25. 10-year Treasury is dealing at 1.80, and US 2-year yield, US 2-year Treasury yield is dealing at 1.16%. I'm seeing an interesting phenomena. There's a spread between Brent and crude oil, WTI crude oil, is narrowing down. It's currently today is less than $1 per barrel, which was USD 4.5 per barrel 3 months back. A significant spread reduction, and it seems that it has happened due to there's a continuous drop in US inventories. And broadly, demand looks like a good demand in US continued on a chilly weather. Broadly, crude oil prices are consolidating for last 3-4 days and now awaiting OPEC plus meeting outcome today, where people are expecting that there could be some increase. Earlier indications were that probably it will not increase, but expectations on these prices have come off that that OPEC plus can increase output. Today morning, Asian currencies are a little stronger, primarily by Korean won and Indonesian rupee. Indian 10-year yield saw a maximum range of a 23 basis point movement in a single day in last 30 months. It had not happened in last 30 months. Indian 10-year yield closed at 6.83%, primarily due to high government borrowing, gross government borrowing, and clarity of a tax exemption on investment by foreign investors. It seems that Indian bonds are likely to be beaten more for likely lower support from RBI, continuous tightening monetary policies globally. Financial conditions are expected to tighten. And as earlier said, already higher government borrowing and a lack of clarity for sovereign bond issues. Thank you. Have a nice day, everyone.